or two of them.
There you go.
All right, I got 11 o'clock, and I like to do things on time. So, for all of you on board today, my name is Todd Lyden. I am the Small Business Center Director at Bladen Community College, and this is the 5th and 6th webinars we're doing this summer with some great resource partners covering the entire Sand Hills region of the Small Business Center Network. Today, we're really happy to have with us Greg Taylor of the Carolina Small Business Development Fund to talk about financing your business specifically through them. And here's the schools represented in the region. I won't read them to you all, but we've got 8 great schools with 10 great counties. And of course, if you want any more information about all of us, you can go to our main website there at www.ncsbc.net and easily find any of the webinars or seminars we do live and in person on campus, or otherwise we've got these webinars we've been doing a little more often. Well, thank you for joining us. We got our final summer webinar next Tuesday, where we'll be talking to another resource partner, the SBTDC, the Small Business Technology Development Center will be doing a presentation. And if you get a follow-up survey after this webinar from your local small business center, make sure you let them know what other topics you might be interested in webinars, whether we do them regionally or locally. I'm sure they'd be happy to hear from you about that. Finally, as an attendee, you can ask any question you want through the chat, and then there's also, as you see the button there, the Q&A function. You can ask there anonymously if you prefer, but otherwise you got the option to ask questions either way you go. So I'm pleased to have a local boy here who's literally local and figuratively local, Greg Taylor with the Carolina Small Business Development Fund to present for us today. Greg?
Well, hello, Todd.
You ready to roll?
I guess so. So this is where I hit that share screen button, huh?
That's all you.
All right. Thank you.
There we go.
All right. Hopefully everybody is seeing the screen now. I'm Greg Taylor, as Todd said, with the Carolina Small Business Development Fund. It's easy to get in touch with us. Our email addresses are our first letter of our first name and our last name, and then at carolinasmallbusiness.org. Had somebody ask me why we only did mall businesses one time. You'll notice that it says carolinasmallbusiness.org or carolinasmallbusiness.org. But anyway, our organization is trying to serve the underserved populations in our region and our state. Our vision is to create economic opportunity for all people. Our mission, to foster economic development in underserved communities by providing capital, business services, and policy research to support small businesses. Underserved communities. Underserved communities can be both geographic and demographic. Women, minorities, veterans are all underserved communities, as well as rural areas are underserved communities. And we try to fill those gaps. We were founded almost 30 years ago to create economic opportunity across the Carolinas. As a statewide nonprofit and certified CDFI, we believe in what we're doing. We're trying to support the small businesses in our state. And CDFI, by the way, stands for Certified Development Financial Institution. And we try to help small businesses succeed by supporting them in 4 ways. One, we want to be a partner for small businesses in North Carolina. We want to work with you and help you establish your business. If you already have a business, we want to help you grow your business. We try to be an accessible funding source. Sometimes the banks don't want to fund your projects for whatever reason. Banks have their own target markets they're dealing with at various times in the business cycle, and it's not always convenient for you, the entrepreneur. A trusted business guide. We provide business services department And they're kind of like your small business center directors or your SBTDC counselors. But our folks tend to focus on the clients that we have, trying to make sure that once we loan the money that they succeed, to try to work with them and guide them. That doesn't mean you can't still talk to your small business center director, your other business counselor. We certainly encourage that. These folks are all our partners as well. And all of us want to see you succeed. And at a higher level, our leadership tries to be an advocate for small business. We see a lot of the issues that small businesses have since we're so close to you, the client, and we see your problems, and we try to make sure that your elected officials are aware of what those problems are, so that maybe they can either remove whatever obstacle legislation has put in the way, or help you fix whatever problem there is out there that needs to be fixed. And the question everybody asks, do you need a business plan to get a loan? Yes, you do. Particularly if you're a startup business, you're going to need a business plan, because it's for more than just getting a loan. I'm sure that if you've already had significant conversations with your small business center counselor, you know this. But the process of building your business plan forces you to think through your idea so you can anticipate problems and evaluate alternatives. Now, I sometimes get the question, should you pay somebody to write it for you? Well, I'll answer it this way. I once had a client who was referred to me by a bank, and the client walks in. This was when I was a regional director for the Small Business and Technology Development Center back in the day. But we sat down, we got to talking, and he said, I need you to tell me what's wrong with this business plan. He said, because I paid good money for it, and whatever's wrong, I'm going to make them fix it. And I said, well, why do you say something's wrong with it? He said, because I took it to the bank. He wouldn't give me any money. He sent me to you. I said, all right, well, let's look at it. So we sat down. I started kind of reading through it while he's kind of talking there, and I came up with a question. I asked him the question. And he said, well, I don't know. He said, but I'm sure they had a good reason for putting that in there. And going through the business plan the whole time was like that. He could not answer a single question. Your funding source wants to know that you know how to do your business. They don't want to know that you know how to hire somebody to write something. So if you hire somebody to write something for you, you better get in there and you better dig deep, because when that questions come, you are the one that needs to be able to answer them. Now, I have had people who paid somebody to write a business plan and they got funding. But I'd say that's the exception, not the rule, because the business plan is for you. It's for you, so that the people that you're dealing with know that you know what you're doing when it comes to this business that you want to start. Take advantage of the free counseling services that are in this region. Some of them are on this call. Your small business center directors they specialize in helping folks with who want to start a small business. So I suggest you utilize them. They're not going to charge you. They're going to help you. Now, I'm going to just skim through this because this is something you really should go through with your small business center director. And skip down to the bottom. A loan from a non-traditional lender, CDFI. That's us. Let's talk about getting money from us. Now, if you look at our website, you'll see that our website says we make loans up to $250,000. Well, that's not right. We just completed a loan for one of my clients for $1.7 million. It's a new program. It's new market tax credits, and it's the first one that we've done. But the $250,000 is a guideline from a while back. If you've got a good project that's over $250,000, then we want to see it, particularly if you are an existing business. Now, if you're a startup, going over $250,000 is going to be difficult. But our interest rates tend to average from 7 to 12%. We can go a little lower on some projects and with some programs. And we only do business with for-profit businesses, except we have one program, USDA Community Facilities Program, that is for municipalities and nonprofits, organizations like fire departments, rescue squads, charter schools, private schools, those kind of things. And it's only for rural locations. It's a USDA program. So if you know somebody that's a nonprofit that can show a history of their funding so that they can justify having a loan, because it's another thing. Our programs are loans. They're not grants. I'm sure your small business center counselor has already told you, grants are not something that most of us are going to be eligible for. There are some cities, for instance, that have little grants for like sign grants or some of those types of things. But as far as a grant to start your business, probably not. And in talking to Todd, we determined that maybe, and this thing at the top is blocking me, part of my screen here, but anyway, that it might be helpful for me to discuss maybe some of our programs specifically. So we're going to talk a little bit about some of the programs that we access to help you. But keep in mind that you and I, I'm a business development officer, you're the client. My job's to help you get your application in and guide you along the way, but underwriting is the one making all the decisions. And actually, I was told when I was hired that my job is to get the applications in. It's underwriting's job to determine which of the many programs we have the particular application qualifies for. What we see on this page is our Veterans Direct Loan Program, $5,000 to $250,000, terms up to 60 months. Can be longer if you're doing land, commercial real estate. It can be 6 months of interest only on the loan. And it's for veterans, active duty military, military spouses, also spouses of active duty military who died in action. Money can be used for working capital, equipment expansion, improvements, or purchase of commercial real estate. It's a pretty broad category there. And the next one is the Tory Burch Foundation. This is one that might interest some of you. Loans $5,000 to $50,000. This is for 51% women-owned businesses in North Carolina, and you've got to have been generating revenue for 2 years. But if your project qualifies, you get an interest rate reduction of 2%. Now, the interest rate is determined by the underwriters based on their evaluation of the risk of your project, your credit, the collateral, those kind of things. And once they determine what that interest rate is, then this program would allow a 2% rate reduction from that because of the partnership with the Tory Burch Foundation. And the money can be used for working capital, business acquisition, equipment, tenant improvements, debt refinance, or inventory. We also participate in the USDA RMAP program. I forget what RMAP stands for, but anyway, it's rural. All businesses in rural counties are eligible, up to $50,000, interest rates based on underwriting, up to 10-year term, but no funding for construction or administration. It's got to be for the actual business cost, and it can't be building the building. Now, this next one is something that I want you to pay close attention to. This is our CDBG Disaster Relief Program. This is targeted at folks who were impacted by Hurricane Matthew. This is a program that I wish had been available immediately following the hurricane. That's when it really needed to be there. But this program is the best program I've ever seen for small businesses. For this type of thing, or for any other, actually, because this comes very close to being those elusive grants. They are very careful not to refer to this as a grant. It is a forgivable loan. But if you were impacted by Hurricane Matthew, this loan would cover actual damage and or economic impact. Can be used for property repair, working capital, equipment, furnishings, inventory. There are limits on refinancing existing debt. They say that it's not excluded, but I haven't found an instance yet where they were willing to do that. Refinancing existing debt is probably not going to happen. Up to $150,000 at 0% for 3 years, and the loan is forgivable over a 3-year period. In other words, after 1 year, if you're still in business, $50,000 of that 150, or 1/3 of whatever you get, would be forgiven. And after 2 years, another third would be forgiven. And after 3 years, the final third would be forgiven. So it would never have to be repaid, never a payment to be made. If you go out of business, there's going to be a tax bill that comes. But guess what? That's the way the IRS law is. As that forgivable portion is done, then that portion is going to generate a tax bill for you. Yeah, and I had a guy get hung up on that one time. But the fact of the matter is, if you got a job paying you $1 million a year, you wouldn't turn it down because you're going to have to pay taxes on it. And that's essentially the same thing. After the first year, when 1/3 of it goes away, you're going to get a 1099 for that. But if you were impacted by the hurricane, you're probably still carrying over a bunch of losses from the hurricane to help offset that. And the thing that really can be irritating is it still must be underwritten. It's still considered a loan. It's a forgivable loan, but it's still considered a loan. So you got to go through all the loan paperwork. You got to cross the T's and dot all the I's and submit, your life under a microscope. But this is real. And if you get this money, it's the best money you would ever get. I have told every politician that I have seen since this came out that this needs to be available the day after the next disaster. Probably won't be, but this is the best I have ever seen for actually helping small business. EDA, and this is a fairly new program. Eligible counties, most of the Southeast, about all the Southeast: Bladen, Brunswick, Columbus, Cumberland, Duplin, Harnett, Hope, New Hanover, Pender, Richmond, Robinson, Sampson, Scotland, and they even threw in Anson County, way up there towards Charlotte. The goal for the lending is that there's one job created for every $30,000 that the program lends out. That is a goal. It is not set in stone. There are limits on refinancing existing debt. I haven't seen a project yet, so I'm not sure exactly what those limits are going to be, where they're going to draw the line. Can be for 1/3 of the total, and a limit of $150,000 per project. So in other words, if you want $150,000 out of this pot of money, to get $150,000 out of this pot of money, the total project would have to be $450,000 or more. Interest rates of 6 to 8.5% based on risk. I'm told that might be able to go as low as 5, depending on some other factors. And it can be up to 90% of the project. In other words, if we're doing the project is $450,000, our terms are generally that if you go to the bank, then you figure they're probably going to want you to put up 20% and they put up 80% in most cases. For us, it's 10%, and we do 90% of the project in most cases. Collateral is, of course, required, and it can go for 3 to 7 years for non-real estate and 7 to 10 years for real estate. And for you small business center directors out there, please be on the lookout for these, because my bosses are telling me to find these projects. So. And the IRP program. This is the intermediary relending program. The government does this sometimes with nonprofits. You put in for a grant that they've got out there to try to meet certain criteria. In this case, our eligible counties are Bladen, Columbus, and Robeson counties. Those are 3 of the poor counties in the state, so you can see why it probably was funded. Intermediary relending program, basically they're giving our nonprofit the money to loan out to businesses in these 3 counties, and when the money comes back in, then we can relend it again. For this money, an environmental assessment is required. Funded at competitive interest rates based on risk, up to 75% of the project. Collateral is required, and working capital equipment can be for up to 10 years, while real estate can be for up to 25 years, which is a much more friendly terms than some of the other types of money. But as you can see, we offer several programs. Some of them the funding is traced back to federal sources, and some of them, like Tory Burch, is from more private lending programs, and is to try to create jobs and provide specific loan products that are not available through traditional banking institutions. Our funding, depending on the particular program we access for your funding. And again, that's something that's going to be determined at underwriting. When you put in an application with us, you're going to see that there's maybe a few extra questions. And that's to make sure that our folks can figure out, okay, what money, what pots of money can we use to fund your project? You know, what are you eligible for? And that's works pretty well. Our money, depending on what the source of the funding is, can be used for working capital, inventory, just about any purpose out there. We can some of our funding can be used to restructure debt. But pretty much everybody says you can't use our funding for personal expenses, down payments, delinquent taxes in most cases. And of course, one of the things that maybe makes us a better choice for some people is that we tend to look beyond the traditional things that maybe other lenders do. For instance, a credit score. We tend to go lower on the credit score than most of your traditional lending sources. In particular, our underwriters will look beyond your credit score to see what got you where you're at. If you have a low credit score, why do you have a low credit score? Is it maybe medical bills? We tend to discount medical bills. So we're looking for ways to fund your loan. And that's can be pretty important for some of the demographics that we serve.
Greg, you got a couple of questions here.
Okay, I'm sorry.
The first that related to what you're directly talking to is, will the determination be based on personal or business credit?
Both.
And we have, is there a deadline for applications?
When you're talking about well, the deadline for applications, if there's a special program, there may be a deadline for applications to that program. For instance, we had a special program for veterans that would actually, if your project was funded, then our funding partner would buy down the interest to a 5% rate, whatever it was. So, the client could actually get a 5% interest rate regardless of where they fit on our interest rate scale. That was pretty nice. However, that program ended May 31st. We are trying to get them to do that again in the future, but we don't have that at this point. But that's the only type of deadline there would be. And going back to the other question about the credit for your business or personal, when you're talking about a small business or a startup, it's all together. Pretty much everybody is going to underwrite both you and your business, and you're not going to be able to make a loan for your business to get a loan without you personally guaranteeing it anyway. Matter of fact, anybody with over 20% ownership in a business is probably going to have to guarantee a loan that business gets.
And I got one more question for you. Can you be approved for multiple programs?
Yes. We do sometimes pull together resources from multiple programs to meet the needs of a particular client.
Good. And we got another one. If debt is due to personal startup capital for the business related to a low debt credit score, is that better than personal debt?
Okay, ask that question again.
It was asking if if it was due to personal startup capital related to the business versus personal debt, is that better or worse?
Well, it can be better, but not in all cases. Was there a business plan when that business started up? I had a client back when I was with the SBTDC that was a doctor, and this guy was making probably $250,000 a year. And he comes in. He's already been doing his startup. It's medically related. Doctors, including he, are going to be able to refer clients to this facility. Insurance going to pay a lot of the bills. I mean, it's almost, you think this is going to be a guaranteed winner. But he didn't get a business plan. He just started doing it. He spent his savings, and then he maxed out his credit cards, and he was still about $100K short. And the banks wouldn't loan him any money. He didn't understand why. And he walks in to see me, and he says, I got to have $50,000 in the next 3 weeks or my project's dead. I said, so you just need $50,000? He said, no, actually I need 100, but the other 50 I don't need until a little bit later. There's not anything I could do. The fact of the matter is, if he had done a business plan and walked into the bank and said, I need to borrow XYZ, I'm going to put this much money in, and I'm going to put $200,000 of my own money in, and I need to borrow another 200 or 300 or whatever, they'd have loaned him the money in a heartbeat. But after his project was already, to this point, and he hadn't planned, to get it beyond this point until too late, the banks, no funder really wants to see that. And unfortunately, that's the case with a lot of entrepreneurs. I mean, it's kind of an entrepreneurial mindset. They just say, I'm going to start doing this and I'm going to do it. And they start doing it and they get well into it and realize, wait a minute, I don't have the resources to get this across the finish line. Now, you need to know that ahead of time, because you can leverage the funding you have to get the loan. But once you've already spent that funding, it's a little bit late. So, but anyway, does that answer the question?
I think so. Thank you.
All right. Was that another question that popped up?
Yes, the question is, who does the underwriting for Carolina Small Business?
We have underwriters on staff.
Okay. We have a question for another webinar. How do you start a business with basically no money?
I think you're going to have to talk to your SBC counselor about that. There may be ways that you can pull it off, maybe crowdfunding or something, but if you've got good credit, you might be able to borrow money. But it sounds like to me this is a topic that you need to delve into in depth with your counselor and your personal situation.
Good questions. Good questions. Or if we got you off track there, Greg.
No, I'm just trying to make sure I'm still on the right slide here. I think we covered this one, but interest rates and terms, that kind of thing, are be based on the size of the loan, what you're going to use the money for, your overall risk assessment, and what program we actually end up using, or programs we actually end up using to fund your project. And our average interest rate's probably between 6 and 12%, depending on the pot of money and your credit history, that kind of thing. Your project sometimes may go below 6, but that's that would be the exception, not the rule. How to apply? You can complete our application. Our application is entirely online, but you can also print off a paper application from our website. There's an apply button at the top of the page for just about every page on our website, and through that you can get to the application. If you're doing the disaster loan, you'd go a little bit different route. I would ask that you email me or call me and let me guide you through that process. But our general applications are right there, accessed online, and once you start putting in your information and all, it'll give you an opportunity to say, well, I want to do it in writing, and you print off your application and do it that way. I know a week or two ago they were having some trouble with the online application, but I think that's been worked out. Most of my clients just use the online application. If you do the online application, please email me once you hit the submit button, so I can make sure that everything is working the way it's supposed to, and guide you in the process. One thing, for instance, once you hit submit, you're going to get an email, and you need to respond to that email, because that is the signature for your application, the electronic signature. And until the application gets that electronic signature, it doesn't go anywhere. It kind of sits out there in limbo. So, send me an email, and I'll guide you through the process and make sure that you get your application submitted. Once your application is submitted, then there's the various documents and all that will need to be attached to it. You'll want electronic copies of your tax returns and that kind of thing to attach to it. Your business plan should be attached, those kind of things. And if there's anything else that is needed from you before the application can be sent to underwriting, a very nice young lady named Shanna will email you and say, hey, we need this. Keep in mind that until all of the documentation is there with your package, it's not going to go to an underwriter. So we need to get on that, make sure that all the documentation that's needed is there. And once it goes to the underwriter, you can expect a call from the underwriter. And if they want any additional information, then, you'll hear it from them. And you get a chance to talk to the underwriter personally and explain your project and why it's going to be a success. And these are things that are going to be asked for. Your resume is going to be one of them. You want to know that you know how to do the business that you're applying for a loan for. And I see there are a couple of questions up there. Are there any other women target funding? I don't know of any other programs that are specifically targeting women for funding. And do we fund less traditional businesses such as barbershops or salons? And yes, we can do that. Okay. Wow, up to 31 participants. Application process, internal review, and we've already gone over that. Once your application goes to underwriting, then we try to have you a decision within 30 or 45 days. And further questions?
Greg, if you could go back, you mentioned one new one very early on. I don't know if you could, and I know it wasn't in here, and I don't know if it's that new, with the new market tax credits.
Yes, that is for rather large projects in certain areas, and it's existing businesses only.
Is there? You mentioned it's targeted. What is it specifically trying to target?
Poorer areas. The one that I did was in Robeson County, and I know that there was another one that was done in one of the mountain counties.
Oh, good. Okay. We got a couple of questions in the Q&A. Do you do funding for adult assisted living projects?
Depending on the project, yes, we can.
And of course, we have the copy of the slides will definitely be available. They'll come out straight from your Small Business Center. But Greg's got this ready for us. We'll have it out to you, out to the center directors, and they'll get them out as soon as they can. Any other questions? Greg, I know that you mentioned it, but for the USDA and some of our areas aren't rural, but what qualifies as rural?
Well, that depends upon the particular program. For our community facilities, it's a designation on their on the USDA website for this particular program. I think it's like communities of 25,000 or less or something. We have to get an application, get an address, and go to the website and look it up to see if it's eligible. And that's for the community facilities money. But if it's by county, for the most part, for any of the other USDA money.
Okay.
Cumberland would not be rural.
All right. Any other questions for Greg? Check the chat. Nothing there. All right. Greg, are you okay if we post the recording of this for folks who missed?
I don't see why not.
All righty. Well, we've got, we know some people couldn't attend today, so we'll make sure they get that. And of course, we've got the slides available. Those will be going out shortly if you check with your Small Business Center director. Otherwise, if there are no other questions, we don't want to keep anybody hanging on. But
well, Todd, I will expect my 20% of whatever you collect off of my recording.
Of course. So everybody's got Greg's contact information right here, his direct lines and his email. Wait, we do have one last question here. Would it be hard to secure funding for a market that hasn't been tapped into?
I don't. What kind of market and what kind of project?
Yeah, it would definitely depend. But if it has a good business plan, generally, most people can be convinced, right, Greg?
Yep, that's right.
Even untapped or tapped, as long as the business plan's pretty solid and the funding behind it's pretty good, most underwriters will give it a pass. So, all right. If you don't have any other questions, we'll thank Greg. And like I said, we'll have this available through the slideshow. We'll be putting this up online shortly. So if you've missed it, or if you want to come back and rewatch, catch something you thought you missed, we'll have that available too shortly. If you just want to kick me an email, you'll get that after the fact. It's tleiden@bladencc.edu. You'll see that in a follow-up email through the webinar system. Otherwise, thanks for everybody for coming out today. And don't forget, we'll have one more next week if you're interested to sign up. And thanks for coming out. Thanks again, Greg.
Thank you, Todd. Y'all have a good day. Look forward to hearing from some of you.